Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and it's May 6th today, Monday, after the non-farm payroll event on Friday. Here we are, starting a whole new week. I hope you all had an awesome weekend. Let's get to it. Make sure we're still up and running this morning. But if any of you guys were watching the F1 this weekend, it was great to see Lando Norris win a race this week. That's awesome. Good morning, Tommy. Good morning. Good morning. All right, let's see where we're at. Okay. So I'll get back to NASDAQ because I've got an idea where I think NASDAQ might be running to this week. Let's get on ES. Hope you had a good weekend this morning or this weekend, Tommy. So this is what I'm seeing already in ES. It's what I'm looking for in NASDAQ this week. So ES has already done that. So I was looking for this. We open, come back to this weekly fair value gap. Hit it, go through it, connect with this old high here, and then start pushing for higher prices. Looking to get back up into this, all the way back up to 52.46. Upside prices. So we're going to start digging into this weekly fair value gap here above us. This week, I'd like to see us get through here and get on top of this one so we can start seeing that, get some leverage on that so we can go higher. So I find this kind of interesting that we've managed to come back to the daily fair value gap. I don't think we've quite hit that high yet on the daily. No, we've not. So maybe we'll come back and revisit this one more time. Dig into this fair value gap on the daily. It's inversion. I'd like to see it if we do have a plunge back down here for a Tuesday low, or if we get a reversal this morning back into the order block here, because this is the mitigation block. So if we come back to this mitigation block's body in here and leave this open to continue to the upside, I'd like, even if this is a small range candle day, and then tomorrow we come back and tap this one more time, creating the Tuesday low to start pushing for higher prices, getting back up into this fair value gap above us here. My aim is always over here, or like array to like array in terms of premium and discount. You'll see that when we get to, it's a lot more prevalent in the NASDAQ. Body trades above this candle. It's the breaker. It runs this low on the daily. So as soon as we have this reprice, rebalance, we kind of treat this as a fair value gap. So as soon as we trade above this candle's close and we trade above this candle's high on a full body, open, come back down, tap it to continue going higher. Now you're looking for like array to like array. So we're looking for this now to continue all the way up into that upper range here. And I'm going to put this out there so when we actually reach this level, you're going to know I told you a long time ago. See, on support, I like the way the body opens up right on the weekly fair value gap. I'd like to see this start pushing down deeper into this daily fair value gap, pushing for lower prices. Now that we've taken out this low, this inversion here, we did not come back and revisit it. So we may, all the time we're on inside this one, we could get a revisit of this fair value gaps low here, back to 105.52, and then continue back down. You want to see a wick up for that, and then a continuation on the downside, which would affect. So typically right now, I'd say we're still bearish, still proven otherwise. So look for the mean threshold of this fair value gap right here on the daily. Let's focus on this one right now, because that's the one we're presently occupying. So we'll come back to the mean threshold. So I want to see this close below the mean threshold and start pushing for lower prices inside this range. If not, we may just get a run back up to the inside of it and then continue sideways here for a bit before we finally break through. If we get a body that closes below this, is really a bullish idea, or shall I bearish idea. We need to close a body below here, come back up, find some support at this, and continue pushing through. That will be weaker or higher prices on euro and British pound. So I'll look for a fill of this fair value gap here on the daily. They can see, oh yes, that looks lovely. You look beautiful, honey. That's the model off to the side. How's this looking? I hope you guys had an awesome weekend this weekend. I did lots of Bitcoin trading this weekend. I was doing lots of experimenting and stuff. I probably did like 40 trades this weekend, playing with every inversion and combination of inversions and stuff. So it was quite interesting, quite fun, given it was on a demo account, of course. All right, so let's look at, so anyway, look for this fair value gap to fill. Look for the mean threshold to see if we continue to push through that. Like the Dixie, if we can get through this fair value gap, close below, above that 50%, look for the fill, the rest of this, and then the old highs and mean threshold of this up close candle. If we do get a run back down, again, we have a fair value gap below us. So I'd like to see a CAM 1 model here, all the way from wick to body, fill in this fair value gap here before pushing higher. That'll be good for a CAM model, people. Same kind of thing in pound. We're looking for further push through. Now we've hit this mean threshold, the difference between the two. When I take this one here, see how the mean threshold's only been hit once, and the pound is hitting it for the second time already today. So we're looking for them to push further through this one. We just got a wick above it here, and we're fully wicked through the whole thing here. So, and there's nothing to rebalance down below us here except for this fair value gap way down here. I love the way the body's broken through this reversal. See how that, this would be the island reversal that Michael was talking about, the old school, what they used to say back in the old school, this island reversal. There's two extended pieces of land with this little bit of peninsula out here. You've got this fair value gap on one side and a fair value gap on the other side. If we run through the fair value gap on this side, come back and just tap into it anywhere inside that, that's a long. So that's the reversal that happened on the 23rd of April. Come back in, tap. So that was the April's low. That's the signature you're looking for a seasonal tendency. So if we knew the seasonal tendency was in April to set the low, you're looking for this kind of setup to happen. So as soon as you see this reversal and you open on this day, you come back in. As soon as it starts to load into there, you start loading in your longs to go long, and you're aiming for like array. To like array, you can go from, or sorry, this array right here. So at the moment this one broke, this is the same swing that happens. Reverse right here. If I draw this one up to here, you'll see what I mean. This is the inversion you're looking for to go shorter. Overlaps the one that says we're going higher. You take out these highs, return to this order block. So here's your reversal. It comes all the way back in and fills all three opportunities here to go long. You take out, right? You got to always go for your first immediate high. So I encourage people to take the rejection block and the old high, the most recent high, pay yourself, move yourself to break even, then start running for inside this range. Look for 50%, 62% optimum trade entry. Use your fib tool to scale out there if you need. Then when you get the reversal, the body runs back through it right here. Then you go, now we've got another swing back in the opposite direction. We broke that candle's body. We traded back into it right here. That inversion, you can continue down. So you trade from like array. You get all the way down and you just keep letting that run until we get the upside broken on a fair value gap to the upside. You keep staying in that trade. You keep staying in that trade. Here's the reversal. So this day on the 24th, 23rd, it opens up and actually trades above it. You close this trade here, right there. The moment it comes back to it, taps it, or you just say, I'm looking for this. If I miss this opening, so if this got some legs and took off, if we get a body that breaks this candle's high, we trade back to it, we get in long. So if you took it right here, when it reversed, came back into it, you capture the long all the way back to like array at top, like discount premium inside this range, and you would add a perfect fill. So you got entry here, perfect exit there, right at the top. It snapped back, and then you wait for another opportunity to enter, because right now you're pulling back near the middle of the range. Could go either direction. So I hope you see that as and that's just on the daily. We point this out on every time frame. Go down to the 1 minute. Here's your reversal here. Body breaks it right there. It closes just above it. See that? The body closes just above it, opens up, comes in, taps it. And that's from a 1 minute to a 1 day. It's fractal, folks. It happens on all time frames. Recognize them, and I tell you, it's a key setup we like to use. And then it happens at an optimum time of day. If it happens on the minute to the hour, or the day to the week, there's just tons of opportunities out there. So you're looking at this here. See how we have a run above these old highs. We have a reversal. Body trades at it. Haven't traded through it. So if we close today through this, come back up and tap anywhere inside here, here, or here, we're short. We're looking for continuation down into this fair value gap below us on the Canadian dollar. So you're looking for a little more of a pop down and then a run back up into here. So we're looking for further downside today, high, and then continuation for the rest of the week on the downside. I think that's what we're looking for there. Here's your swing here. And again, we're looking at this. So you look for the marker that shows that. So as soon as you get a body trade above that, right there, sorry, right here, trades above it. Anytime you get an opportunity to get into it here, which would be right there, and all the way through and fill here, comes back to a logical level. You key off of it and you continue higher, and you're aiming for this one here. So you would have gone from like to like inside that range. You would have had 3 days of up candles. So we're looking for this, and it's filled already again. So now I want to see to start digging into this candle some more, or at least close above this, come back, tap it, or come back and rebalance right in here. Leave a piece open and then start pushing forward. You want to see it stay open though. I want to see it just come back, tap the tops of these candles here and leave that small little portion open, and leave these open for a breakaway gap for higher prices. Looking for the rejection block after this old high here, rejection block and wick. See, this is what we're looking for on those higher, those euro and pound, this kind of stuff. Here's your swing, right? Body breaks above it. You don't get a chance to get in on it. Hot diggity dang. Is there another one right here? Nope. That's it right there. You don't get an opportunity to get in on it. You get this fair value gap here, mean threshold. So technically then, if you can't catch this one, you got to look for this candle or this candle as your entry point. Runs all the way back through into the discount. So you got to look from that range to that range. Pull your fib tool. Look for 50%. From there to there. Look at there, there's 50% right on the money. So when you're looking at that small range, you say, if this has got intent to get above these old equal highs up here, do we have, and we want to see this stay open as a breakaway gap, are we going to revisit this at 62%? Possibly, but maybe start scaling in at this. So look for the fair value gap. Look for the optimum trade entry around the 50 to 60 to 70%. What sits in here that would give you a likelihood you'd find support at. What this fair value gap would be a great place. And Michael has mentioned many times that the mean threshold is the key level. If we don't close below it, then you're pretty much sure that you're going to continue higher. And that's, you'll learn through experience. Japanese yen, as the American dollar starts to lose strength now, you want to see this Japanese yen start to really dig down through this fair value gap. I want to see it get below here. So we've now dug back into it. I want to see this start closing today below. We've retraced back into the old lows here. Start running for this fair value gap to fill and continue on the downside. Oil, what is oil up to? Need I say it again in a different asset class? We have a swing point right here. Body breaks below it right here. This candle right here trades all the way back up inside it. You would have fully loaded your position on, unless you took this one over here. You would have probably had your stop taken up top. You would have taken that one. As soon as that body trades above it, I'm usually out by then. And then you wait for it to trade back into it. Oh no, that opened that up there. Come back up, fill, run down. You've got to pay yourself at the PD arrays that you see. All this stuff is potential payment. If you're looking at those as wicks, all these attempts to get down here, that should get you questioning whether or not we're going to get a big bull run yet without running back and taking out an old high. When you see these big wicks down there, that's like resistance to try and get down there, right? So you got to pay yourself accordingly. That would be a tough one to be in to trade, especially on a daily. Be a lot easier on a 1 minute chart. It'd be interesting to see what you saw right here on that chart if you would have entered in on a short there. What opportunity you could find to get out on the 1 minute chart there. But for today, where are we sitting at this today? We've got a lot of resistance to get through right now. Nothing. We're still below this fair value gap here, so I'd like to see that hold price and continue on the downside. get yourself a nice little inversion swing point. As soon as we take out this low, look for a swing point inversion so you can get long on from wherever this lands here. You want to see this kind of swing thing happening, but you want to see a body break above it so you can get some support at it, run back up, start paying yourself at the first available high. And in this case, you would have been in right here and literally out, or a portion of it out there, and move to break even right on that as soon as it hit that high. So you'd have these multiple times you would have had an opportunity to get out. Then you get there's no reversal here. You get a swing here. Body trades above it here. You don't get an opportunity to get in on it. Look for the order block. You get an opportunity to get in on the order block to go long. Pay yourself again at the tops, right at the tops, above these old highs, whatever way you want to look at it, or look at this order block here, mean threshold. There's many different ways that you can manage that. You guys will figure that out on your own. I'm just giving you the opportunities to see the swing points and a golden opportunity to get yourself into a good trade. We have a swing here above highs. Here's your swing pattern. Body breaks below it. As soon as you see this, if it now clears out this candle's low and you trade back into that candle, that's the one you want to get short on to run for rejection block, old lows, wicks, order blocks, whatever PD array suits your fancy. So right now, if you see this candle's high get taken on a close, a body close, come back inside there, anywhere inside here, stop loss would be here to run back up into this PD array here. So I'll put this out here and we'll kind of look at it as, once you trust these PD arrays. So I gave you all the hindsight stuff. Now I'm giving you the stuff that's happening live in the charts right now to look for. And it's up to you guys to decide whether or not you want to follow it and see what you see. If we close below this point, again, on a body close, then we're going lower. We're not going higher. We need to get above this. So we have not traded, we've traded right on it. Once we hit the high of it, we're still trading below it, so we're looking for lower prices. We want to see this low get taken out. So keep your eye in here. If this decides to reverse now, and we don't have a body that closes below that, which you just did, so now we're going lower. So we're looking for this low to get taken out down here, rejection block, and then the old low. These ones you guys don't care about. Gold. Somebody says, tell me about gold. Oh, I was looking for a buy limit in here on the weekend, and it didn't come back to get me. I was trying to get a cam 1 model, and it's a cam model right here. It's looking for a deeper cam model, wasn't no entry though. Okay, so I was looking for a high on that, a buy limit. Didn't get it. No big deal. But I knew she was going up though. Look for these equal highs to get taken out here. There's a couple of PD arrays in the middle first. So we've got this whole low taken, this or touched. We've got the mean threshold here hit touched. So if you get a rejection block, it just taps the rejection block, turns around, and we establish this false ceiling that retail will be thinking this is false high, or it'd be a ceiling, and then they'll be trading back into the range, which could quite easily happen. But wait for a clean setup for a year long. Wait for it to be clean. So reversal, swing below a low. We come all the way back up inside it right here. So you trade all the way into that. Stop losses here. Aiming for like array above you, which is right here. So you've got like array to like array right here. And yes, we cut through candles. And I'm not form fitting that. This This is what I'm pointing out on those other ones back, further back. This like array, discount array to a premium array. And yes, I will use these. If I see nothing over here, I will use that one. Test it, try it out, tell me what you think. Banks, Bitcoin. Oh, did I have a button with Bitcoin this week? Okay, so we've got a swing point right here. You heading off now, love? Oh, you're still waiting. Okay. All right. Love you. Have a great day. Let me know when you got there. Okay. All right. So we've got the open now. Look for a return into here on Bitcoin and start pushing higher. Stop loss would go below the lows or below here. Ideally, it's below here. And you're looking for further upside prices. And how you manage that is entirely up to you. But just return to here. And if it doesn't, if it takes this high out here, look for the bold candle. If the bold candle comes back anywhere inside here, your stop loss would sit down here. Look for higher prices. If the high gets taken out, you want a big bold candle above the high, and look for a small candle, this as being your breaker for a run below this low. Alrighty, let's get back into what else we got over here. Soy, the bean. So we've got swing reversal. The high's going to get taken before you get a chance to get on that one. Corn. If this low gets taken out, this fair value gap here on the low side comes back up into it for a short. Get a run back into a cam model in this gap. Nothing on sugar. We're down into coffee's deep discount in here. We're just hitting the edge of this fair value gap down here. See that right there? Let it continue. This is a reprice rebalance. As soon as the body drops below it right here, you trade back up into it right there. There's your short. So 1, 2, 3, 4 days now you could be into coffee going short right off that reprice rebalance. And if you don't know this setup, then don't worry about it. Wait for the cleaner one, like big body candles getting through stuff. And you're returning back to a cam 1 model here. Fill this fair value gap below you here in this consolidation. And then wait for another setup, either to take out the lows, which is where a big pool of liquidity is sitting right now, right below these lows. So if we run those lows out, look for a reversal pattern to go long on coffee. Live cattle came back up into the mean threshold of this order block. Finally dropped below. Here's your gap. I've showed you an imbalance. I've showed you a fair value gap inversion. Here's your gap as well. So if we have a body that gaps down below it, or sorry, there's a gap here, and we actually close below the gap and then return to the gap to go short, you'd be in this on a short. And you're basically running for your equal lows. Or if you're going to go like array to like array in this huge run here, where's the nearest one? Way down here. So if we're looking for live cattle to get all the way down into this level here, and the way you can manage this is if you're actually trading from array to array and you're only trusting that one thing, then you're pretty ballsy. If you so that's the downside objective for me. once we've entered into here, you would have caught from February 26th and stayed in this all the way down to wherever this ends up now. And I don't know how much that would have made you in lean hogs from 185 down to 167. But I bet you that it would have been a nice mega trade. Because even here, try this one first. Sorry, I'm not getting too much saying hello to people this morning. I'll be there in a second. Just checking some stuff out here. Some curiosity pieces. There's 62% right there. So if you're paying yourself at these key levels, you pay yourself 50%. If you're on this big rundown, pay yourself at 50%. Then as soon as you hit 60%, you drop to 50% and you'd be out of your trade there using my method of using the fib tool. Or you pay yourself at 62%, leave yourself in the trade, move yourself into like an old high or something, and then you're looking for this to continue on the downside here. So pay yourself at key levels, especially if you got in here. This would be a nice little run. Anyway, that's lean hog or cattle. We called coca or cocoa from here, literally called it right off that reversal there. I gave that to you guys back in April, literally that day. And you're trading all the way back to here, old high, consolidation, fill the fair value gap, look for that whole area right in here. And I don't know how much that'd be worth to you, but what Michael was saying in terms of this upside, this had more payment capability in this than Bitcoin did. And this is would have been a literal perfect reversal for you guys to catch some major run back into discount raise. I'm just curious. You guys just write in the text below me. Let me know how much coca or Coco would have paid you. Coco would pay you from that level to this level if you just had one contract on that. How much that would have made. Just out of curiosity, I'd like to know. So lumber's still on its way down. Now, see how this little, we've broke this low here. Let me make this a little bigger. See the reversal here and here. We got to see a body get above it right there, and it comes back in and enters you right here. That's your swing right there. You get an opportunity to get long. Look what this ends up. Even if you went from like array to like array over here and you waited, you finally got it up here. Discount, premium. You'll hear me say it over and over again. It's a key level to look for. And you're getting all the way back from this big swing open here. Body pops below it here. You don't get an opportunity to get on it there, so look for the order block. You don't even get the order block. It says, I'm out of here. I don't want anybody to get on. And it starts to run. You don't get one there. You don't get one there. Interesting. Breaking market structure to the downside. You don't even get a chance to get enough of that. Yeah, you wouldn't have been able to catch that unless you were anticipating lumber taking a huge dump on you. And that's pretty much it for me. Let's get back over here. So how are you guys doing this weekend? Did you guys have a good weekend? David is celebrating his anniversary with his wife, which was great. Congratulations. Mr. Tsang, gap up. Yes, we do have a gap up. We're looking for I'd like to see this right here now break below here. Come back up, find some support in this thing here for a short, back into the gap. The ideal place to put the short is right there at that high of that fair value gap right there. Because if it trades above it and closes above it, then you're going higher. And we have not broken this with a body yet, so wicks for me don't count. And if you don't get a chance to get on it, don't sweat it. These things happen all the time. Too many people say, I'm missing it, I'm losing it. Then, and if you took that trade because you saw the wicks and you're gambling on it, you're gambling. Unless you're you say, oh no, I don't care, wicks or not, I'm taking it. You'll find that if you use wicks and you get hammered, you'll find that wicks are not as valuable as your bodies trading below it. So watch the next 14 seconds. So now you want to trade 1, 2, 3 opportunities here, order block, mean threshold. So we'll put one on here. No, I'm not saying you guys have to trade this, you don't, but that's the signature reversal. And if I get a body closes above this, then it's not. It's just returned back to, what's the range in here? From today's 50%. See, that's all you need really to go higher. Just come back into range 50%. And I might have been too precise there. Oh, I was a little too high. I should have been just a tad bit lower, but whatever. We'll see if this continues to come through, give us an entry. You gotta be careful before opening to the opening bell. So I won't stay in this long. This doesn't start giving me what I'm looking for. For me, there's no reason for it to get back. We've already come back inside this, so mean threshold is all you get. So you can have your plan and trade your plan, and I know that you can technically just leave your stop loss here and just let it run and I fidget on mine. I look for every little thing thinking, okay, that should be done now. And then you think, well, you could come to the body, you could come to the mean threshold. I don't want that. So if I see a body trade above, close above the consequent encroachment of that, then I'll close out the trade with a small loss. My guess is it's going to come down anyway. What the hell? Let's leave it. We'll leave it. Gotta learn to hold it, leave it. Methodical man, good morning, good morning. Tristan, good morning. Talk, hello, how's it going? And good morning, my friend Derek. Bia, good morning. So see how it keeps tapping this? Yeah. I'll close that out if it's, that'll probably take me out now. Haven't got a body traded above it. Wicks can do the damage. I don't want that wick to get revisited, so I'll start tightening that up. Right up to rejection block. And we're still in the mean threshold. See that? Consequent encroachment closed right on it. So I do not want to see that start getting back up here again. I'll start slowly bringing this in here now. I don't want to see it get above that. I might have pulled that a little too tight. We'll see. I want to see this just come back into it, tap it, and leave. You want some intent to get the hell out of there. And if you don't get this, it's like when you see the body breaking above and it comes back, just taps it and goes. That's what you're looking for. Not all this waffling around in here. And we're right before the 10 o'clock news release. So we might take out this high one more time before finally going lower. Yeah, I don't like this continuous popping up here. I didn't even like that wick getting up there. But we'd had no body close above that consequent encroachment right there. So it's got to take out the high, make me feel a little better now. This just rolls over and goes all the way back down. That's the impatience. I want what I want, not this waffling stuff. Anyway, you guys have a good weekend. Weekly fair value gap goes to 18,119. Yeah, this daily one, it still goes higher yet. We still haven't got to fill this as 18,121. Whatever that candle's low is right there. $18,120.25. So you look for, so now when you hit that key level, you're looking for that daily fair value gap there. We're looking for this kind of signature to set up right there at that key level on the daily. So we're looking for this to happen somewhere in here. So now I feel better that I got out. I want to see it come back to this mitigate off of this and continue going higher and leave this open. I want to come back into the weekly fair value gap. I think I put that on the Telegram channel there. See how they got nice flat equal highs here? I'd like to see it come back, tap the top of that, or at least the into this, because if you look at the ES here, ES has come down and tapped the top of that, and Nasdaq hasn't. Dow hasn't touched the top of the old high yet either. It's got a small, it's leaving a, it's gapped up here, so we've got a small price imbalance, unless we just drive all the way through this and we close below this today, back here. Good, we took the highs. So we still got around another 10 more to go. 20 more handles to go. And we still got 9 more minutes. So this would be a great little thing if you see this come all the way up to the edge of that daily fair value gap. So kind of anticipate what you want to see now. So if you see, picture this, because you think, I want to look for my perfect entry. So I want to look for a run up, take these highs out again. 10 o'clock, we hit that high, and then you see a reversal pattern happening, and then you see your silver bullet set up for a short. That's kind of like what I would like to see around 10 o'clock and that particular high to occur. If you want to get a retracement back inside this daily fair value gap here, then you switch over to the hourly chart and say, there's a nice little hourly range I want to try and get back inside for an OCAM model entry here. So that coincides with this fair value gap here for 50 handles. Well, that will be 70 handles by the time we get back up into the 20, if we get the 20 here. Be a nice little haul on Monday. Keep it short and sweet and small. There's also a small volume event on Friday, April 12th, April 15th. Yes. There's one in here. Nice little swing there. See this inversion here on the hourly? Body closes above it, open, come down, tap it. You have 4 or 5 hours of delicious run. You take the rejection block, hold high, leave a piece on to keep running for the rest of your fair value gap on the daily. I am still heading down. Reprice, rebalance. Run back up inside order block. Mean threshold. If you didn't want to wait for that, still didn't seem clean enough to you, look at this one here where you get a body trade below it right there. Trade back up inside your range. Still have nothing traded outside of it. Even if you waited for this one, you get a body trade below it. Trade back up inside it. Continue on the downside. Not as clean, but there you'd have to have your rules really kind of loose to catch this, or to catch this piece here. Here's something I want to point out to you guys. If you're looking for these reversals like this, and you don't, this one kind of runs through, this one runs through one, and it runs through the opportunity to come back and tag it. If you hit the objectives that you'd be aiming for your first time, for your first target, I don't like to take it here unless you're absolutely sure you're going to catch a reversal back the other way. And I guess you've got a gap right here. Well, you catch just on the edge of it here. So yeah, I guess it would still work. Like array. Ran back up to order block, old high. You took out the highs. You didn't get a chance to get in on that, but you do get a chance to catch it here. And then finally runs up, takes out all that, these old highs here. So yeah, I guess it would still work. But usually if you can't get in on your objective and you hit your objective before you get an opportunity to get in, then you just wait for it to come back down and start your trade over again. Keep your stop loss really tight. You would have been squeezed pretty good right there before it finally reversed on you. Okay, I got 3 more minutes here. Or 2 more minutes. David, good morning. I'm going to take my filters out here. We have nothing this morning. Nothing tomorrow in terms of new USD. All we've got is the Wednesday, Thursday, Friday. Thursday seems to be the higher unemployment claims, 30-year bond. We have a 10-year bond on Wednesday. Or customer sentiment, a lot of sentiment-driven stuff this week. Later on during the week, though, is where your heavier stuff is. Monday, Tuesday, no major news that I can see here. So here's our upside objective. Sorry, I hear an alarm. Oh, it's my phone. My phone buzzing right here. Make sure my wife made it to work okay. This will be the fill of the fair value gap on the daily. And if we do push through that, look for this 12th to 15th, this little imbalance you see right here, which is what Derek was pointing out earlier. So if we run through this, we may wake up into this imbalance or the edge of it. And again, if we don't see our setup happening here, you wait for your next opportunity, which would be the next PD array for you to see this occur on, and it would be somewhere in here. And if you don't see it there, where's your next one? Order block low or the open, then the old fair value gap above you. And then we're getting into like array to like array, which is what we're looking for. I just wanted to see this get back here, which we're just a little short on this week. But we still may get something happen this morning or tomorrow. If not, still stay in the fact that we're long. Don't try to marry a reversal that may not appear. Stay in the charts, stay in price action. So where I went in here, let's just review what the trade I took there. So it traded below it. So as soon as it came back to it, I got in short. And the moment it breaks that candle's high on a close, right here, it was doing this wick up thing, right? I didn't like the fact that we even wicked up there. I just want to see this tap it. And we've already been through it once and filled this thing. So I didn't want to see it go all the way through like it did. And then when it came back, I was like, okay, I got to get out of here. If you get a body trading above this right here and you come back inside it right there, find support at it, then you're going to go higher. So this is your linchpin for higher or lower. And you want, I took that for going short. And then the rule is if it breaks that high there with a body, and unfortunately, if I would have waited for a body to close above it, it would have been this candle. And my stop loss was sitting right here. So the next candle would have opened, taken my stop loss, taken multiple opportunities to take my stop loss before it finally came back and gave me a chance to break even. So because of this suspicious wick all the way up here all the time, digging away instead of taking off the way I want it to, you get out. And that's why you, now you got confirmation that we've got more upside until that objective is hit, or you see something clean. This is not clean. Once again, we're getting back into NASDAQ's usual chop and chaff that's going on here. So wait for a clean setup. Be patient. There's nothing wrong with taking that and seeing it fail. So you recognize why it's failing. You go, okay, now you can either get back on side with that, but usually before 10 o'clock, you just wait. That's the dealer's range between 9:30 and 10 o'clock. Is the dealing range. We have a nice little discount down here. So I want to see this pop up here. Give us a nice bold candle up here. Small little candle reversal. So I'm looking for that 10, 12, 10, 10, 10, 12, somewhere around there. Oh, Erica's celebrating her daughter's graduation. Congratulations, Erica and Erica's kid. Good for you. You graduated. Off to medical school, off to lawyer school. I don't know what she's doing. Am I trading ES? Nope. I'm not. I'm not. Nothing. I'm not looking for anything here right now. If you just jump on this, you're chasing price, unless you're confident that it still hasn't hit an objective you're looking for. But I've got no entry here, so I'm not going to touch that. And YAM or Dow, I don't know why I call it YAM. I just keep looking over here and seeing that YMM. And if you're into reprice, rebalance, body trades above it, opportunity to get in here, you got to be pretty steely-eyed to see this and then get all aiming for up here again. Consolidation. You got a consolidation with a cam 3. Run all the way down, come back up. I bet you that's going to be 50% of that. I wonder. Yes, it is. Look at that. So I'm looking for up in here. Look for this 50%. I'll leave that on there just to see, out of curiosity, just to see if it actually hits that. We have a clean change of direction right here, which is right where that just hit. See that? Like array to like array inside that bigger range. That's above, just so you know that I'm not bullshitting you, it's above 50%. There's 50% of the range, and that just cleaned it just above the top of it. Now if you roll over and come back down, look for a new price leg down to go deeper. So you can have the key off of this one to go short, which is what this one was for right there. Wait for the reversal. You got the reversal to back into a like array or a like array. So I'm gonna wonder if we can still get past this into this guy here. If we don't, if we clear out, we've taken this one here. If we close below this candle's low and find some support and get through this imbalance or rebalance here, we're going to look for lower prices. If we find support at this, and this just becomes the next price leg up, we're looking for these candle prices here. Fernando, good morning. Did you have fun this weekend with Fernando with the Bitcoin? I did a ton of trades in Bitcoin this weekend, looking for those inversions, reversals. Trading off inversions is really fun. And I even took a couple of chasing price, trying to get myself out of a problem, practice getting myself out of a problem, as well as being in a problem or being in a good trade. I was trying a lot of crazy, wacky stuff this weekend. Still coming out on top, but you know, it was fun. Mike Smith. You wouldn't happen to be Mike Smith from EMS from way back in the day by any chance, would you? I used to know Mike Smith. He was a firefighter. He and I used to, well, he was more of a headliner. I wasn't. I had my own self-defense program. We were teaching for EMS and medical providers. And Mike Smith used to be the go-to lecturer in these EMS conferences. He was the big deal. So if that's you, Mike, hey Mike, how's it going? We used to teach a seminar called the Escape Seminar, which is control, escape, and restraint techniques, teaching people how to deal with violent patients I'm talking about the violence escalation continuum. Anyway, it was fun. We get into these medical conferences. We go down to the States and teach at these emergency services conferences and have a blast. Awesome time. So here's our 1010. Now you want to see a fair value gap forming here. Not quite our the top of our fair value gap. It looks like it's tapped it here. And we just might be a little fraction short of it. So here's our fair value gap forming here. So if we're looking to run back into this fair value gap and this old gap up for the day, then we want to see this be our silver bullet entry. And we'll take this one just to see, and stop loss will go just above this high here, or just above that high there, in case it runs back up and actually fully taps that candle's low. But many times you'll see this where it doesn't fully tap it. It looks like it taps it on the daily. When you get right down into it, you don't see much. So we'll watch this create this fair value gap. So that's the silver bullet that I'd be looking for to go short. So if you don't see that reversal pattern happening, then look for your silver bullet entry. So here's your, so we can do one here. And we'll do one there. Put our stops up here. This is that kind of a fair value gap, 2022 model. Take out an old high. You got your breaker right here that takes out this old high. You return to the breaker, get short. And we haven't quite hit the breaker yet, so if we don't get it, it'll come back. It'll come back and grab us. Bitcoin fun time. Yes, it was. No, sir. Not me. Okay, so you're not Mike Smith, the firefighter. I was going to say you'd be getting along in age now, because I was a young pup when I was doing that. I think he was in his 50s when I was back in my 30s doing that. So he'd be in his 70s now. And he certainly made a ton of money doing keynote speaking. So it's probably, so if it, now that it's not you, Mike. Hi, Mike Smith. You're still welcome, Mike. You're still welcome. What part of the world are you from there, Mike? Oh, it's the first time in our session. Oh, you get to see the first time. Well, we try to read minute by minute, Mike. So we're trying to show you every candle that forms, what we're expecting, where we want it to go. And we're trying to stay in price action so that you don't get flipped off the horse, so to speak. So that's the objective, is to try and stay on the horse. So if we close, instead of the stop loss get taken, if we close above this candle's high, a body closes above it, I'll close out that trade long before it gets up there. That's just one of those, in case it rips off on you and takes out and does something crazy and rips away on you, then that's where you've got to risk 1% of your account. That's it. Finally, see, that came back, gave us a little kiss, take us to the prom now. That's the first one. and the mean threshold has already been hit here. So this one gave us a teaser, not quite the kiss we're looking for. Came up, give us a tap. Well, yeah, we're kind of looking for these fair value gaps. That's called a fair value gap, which I don't know where your knowledge comes from, Mike. But if you're into ICT stuff, that's where the majority of this, what we're going to be focusing on, or what we focus on here, not what we will be. It's what we focus on all the time is the ICT principles. I try to call it, you'll see me use a lot of hindsight stuff, and then you'll see me use as it's happening. We'll see if it's right, see if it lines up. You have lots of different live streamers out there that you can visit. So I do appreciate you spending some time with us this morning, and the rest of you who are in the shadows that are not saying anything. We do appreciate you guys spending your time here. Christoph, tomorrow, inauguration day of Russia for Putin. Everything could happen if Ukraine try to kill him. Yeah. Yeah. Otherwise, we just keep trading. They can drone strike all they want. We'll see how that goes. You're in your low 50s. Well, I'm in my high 50s. One more year, I'll be hitting 60. I still got it. I got it stuck in my gut. Atlanta, Georgia. See, now here you pay yourself. I've only got one lot on, so we're just going to let this sit in here. We're in the ICT church. Welcome, welcome to the blessings of ICT. Now, just because I don't like to lose. See that? It came back, gave me a kiss, but didn't take me to the prom. Sometimes you can be too precise. Sometimes you can be too precise. So now I'm moving into profit. Zero stress trade now, right? We're relying on that silver bullet entry. We called the silver bullet before it set up. We're looking for this bold candle coming down. It set up, gave us our entry at the perfect spots we're looking for. If you would have did 1, 2, 3, even the third one, which is just shy of that order block there, you wouldn't have got it. If this comes back and takes me out, I'm okay with that. If it comes back and revisits, I'll load on again. You want to see this candle stay open. If it doesn't, then at least just close it and leave. And I'm just enough above that order block's body or its wick that I wouldn't want to see it revisit it. But yeah, it could. Ah, what the hell? Let's stay in it. I'm just going to cut out my loss a little bit more. And if we do get this guy here one more time, maybe I'll take him. So pay yourself again. I only had one on there. So pay yourself at these rejection block old lows. That's the fill that we're looking for. Now you just want to see it snap off of that and come back down. So we run down below, come back off the mitigation, continue forward. Don't put your stop loss there, says Derek. They'll see us. They'll see us. Derek, you're always good for a little rib tickle. Got filled also, but closed already at the 835. Nothing wrong with that, man. Don't beat yourself up. If this takes off, don't beat yourself up. You're judging the decision you made here. If this rips back against you, you're going to be like, yes, I did a good thing. Just be happy with what you chose. Just be happy the fact that you took that 8.3, whatever it was, 80.35, wherever it was, you took that out. This is why you pay yourself here. Now, we could have been buffering this, I suppose, which is take that, pay yourself at the low or at the rejection block. If it comes back in again, like right there, you get another opportunity to get short, and you've already paid yourself $200 already, and you had an opportunity to get $200 in your pocket. And now, Fernando, you don't feel so bad, right? Because you made your decision, and there's another opportunity to get short right there. Now you may say, oh, I don't like this. But are you paying yourself at these rejection blocks? This is like, that was $200 that was sitting there for us to grab, and we didn't take it. So you got to pay yourself at these key levels. Mean threshold of this lowest down close candle before running above this old high here. The parent run above this high. So see how the body's traded above this? We got to get out of here now. I got to get out of that. See how this body trades above this? We've taken a swing out. So there's a run above that. So my guess is we're going to run back up into here again now. So I'm just going to take $60, move to the side and wait. If we get another little run up into here, we may pop up into here one more time, get that 20. So I'm going to wait here. This is an opportunity to kind of go long. So kind of look at this one here. Real quick, kind of peek at this little spot here. Inside this range, so the next upside objective would be here, or this order block here, this fair value gap. You're between this one and this one right here. So looking at your range from here to here, 50%, see that? There's 50% right there. So your silver bullet entry, looking for a quick 10 handles. If you're looking for 10 handles from here, that's 98 down to 78. So there's 20 handles there, or 19 handles there. And if this provides a level of support, I'm not sure. This to me is sketchy now. We've traded above this, and we're below that 50%. Now we just hit 50%. So you have to see this give way here, come back, tap it to continue short. If not, I'm long bullish right now. Back up into that range. And there you go. That would have been the second fill right there. And if you're looking at your optimum trade entry inside that range, that may be all you needed, which is to get up into there, 62%. Give yourself the nice perfect fill. And now you want to see this start to slam it down. You don't want to see this one here give way to the upside. You want to see a wick off of here now. Stop dicking around with the candle. Watch this candle bumping away here now. Is it just sitting up here? Is it pausing, crouching tiger before it pounces on the high? So I watch this thing, how it's acting here right now. I watch that right at that key level. And you want to see it snap off of that and start coming back down. So now we're hitting the rejection or the mean threshold of that candle. See how there's no reason why it should be just starting to drill up in here now. So this reversal was the hint that, oh no, that's why I got out quick, because like we've got the reversal happening here. And it's really from here into here. It's a really small range, but $60 better in my pocket than not, right? So now you want to see this close below here. And you got 5-6 seconds. Snap off of it now, come back down. Look at that. So far, so good. Now you want to see, give me some legs here. Start coming down. Not a good sign. You want to see, come on, man. Let's go. You got to get through this order blocks mean threshold. Start pushing. Get back into here. Come on. Derek's got the meat sweats on right now. He's at the Brazilian grill. He's got the meat sweats. Let's get down. Got to go down. Come on down now. Is becoming NQ-ish, yes. Where's the carrot? Let's get the carrot motivated. This is Mike Smith. You're starting to see some of the secrets, Mike, of the algorithm. And you have to get the tattoo if you want to see our you want to get the cult tattoo. We're giving away secrets now, so you're part of the cult. It's really all about the carrot, my friend. It's about the carrot. So mean threshold, not a good place to stop. Come back, find support at that, off this order block. You want to see it peel through here now. I'm putting the carrot here, but I'm looking up here. Come on, Derek. See, I don't even like this. Is like Derek says, it's typical NQ-ish right now. NASDAQ. What's that? What do we got over here? Nothing. What do we got over here? Nothing. Nothing, honey. What do we get in here? So we've got a return back into here, into that weekly. And it's just sitting there in the middle of that. If we lose the mean threshold of, or the 50% of this wick here, we close below that, then we're looking for further prices. So look at this wick and divide it up into quarters. You don't want to see the 50% or more get taken on that. What's our oil doing? Oh, looky, people. Remember we said when it broke to the upside of this? If it broke the upside of that, and I remember saying this to you guys, that's why I put it in here. If we break to the upside and we didn't, then we finally broke to the upside here. Then what do? We come all the way down inside it, validate it, and then run all the way up to premium array. Discount array, premium array. Look at that. Hello. Right into the mean threshold of that order block. And then you do the same thing again, rinse and repeat. So now you look for this one here, this swing point. Body trades below it here. Look at that. You literally open up right on it, right there. And you go from like array again, down to like array again. And now you're going to go smaller from one to the other till it compresses and then it has to bust out of there. So those are delicious little trades that we started this morning. We talked about them. If they trade above it, you heard me say that. Beautiful entry. Two entries you would have had for that. You get another 3 entries here, and now you're sitting between this swing here, and you don't want to see a body close below here now, and you want to see it return back up into this guy here. Anyway, let's go over here. This is fresh veg, Derek. It's fresh veg. Newly picked carrots. Come on. Regular Monday, I guess. Yes, agree. Regular Monday with no news. That aimless wandering. Ooh, yeah. So, Mike, have you studied ICT stuff before? Oh, there you go. It's having a little nibble now. All it needed to be told is that they were fresh. Fresh carrots. Now you can come down. I like this. I do like that. You might just get it yet, Derek. You just might get it yet. If anybody sees another chart that looks really kind of sexy, like Bitcoin right now, Bitcoin, as usual, looks very cute. Swing point, come back in. You'd have to look to get into this range here, 50% or more. So you get an opportunity to get in again, fully get in here, and it finally takes your 50% of your range out, comes all the way back up into the swing point here. Swing, body breaks down below it. You come back up. You don't quite get in it right here, but you look for this order block or this order block. We traded below it here. You trade back up. You don't get it here. Trade below it here. You don't. Ooh, no, you don't get it there. You wouldn't have got anything there. No big deal. So you wait for the reversal. You get the reversal back up into that range. So if you go like array to like array, that would be the upside objective. Huge, or here just inside this range from like to like. And if you close above it, then you start getting excited. Say, great, if we can come back into that, hopefully find some support at this. If you lose this one on the downside, then that's the reversal back the other way. It's doing this again. Body doesn't break that low, so we continue up higher. We break this high here. We come back inside the order block here. Continue higher, take out rejection block, old high, and we start digging up into, not quite here yet, but they've got this old order block right here, the one that you'd be looking for to try and trade off of to go short, and you return to it right there. Those two guys, that guy there. Reversal. Don't get a chance to get on it. Don't get a chance to get on it. So what does that tell you? The same kind of thing here. Later on, you're going to come back and revisit this area that you'll get short to the next discount array. So I'm predicting what's going to happen over here in the next couple of hours. You should see this return back up into here and then back down. So before I leave today, we'll come back and revisit this, and you'll hear me talking about it now. And we'll see how this level and that order block there play important roles in what's going to happen in the future as support to run back into a discount array. We'll see how this plays out here. We're back into this here. So you could get a run back up into here, find some support, and continue down, digging into deeper range, and this guy right here. We've hit him twice already, so I'd like to see this guy here oof, you do have an opportunity right there. That one closed up. That one closed above. Come back and find inside. So this run here, it was right there for the long. And Derek's still stirring up ingredients, but you're still in there, buddy. You're still in. Tangeray to Tangeray. Is that what it does? Is what it does to me. This is just high resistance. This is, you know, we should be showing you a before and after picture of Derek in these kind of environments. His hair's all nicely coiffed. And then after the high resistance liquidity run, his hair's all messed up, chunks missing on the side. This is why you stay out of these kind of choppy, crappy environments. If it's not clean and you're not getting what you want, move to the sidelines, wait for something better. Like they happen all the time. If we don't catch it today, it's Monday. It's Monday, folks. We have plenty of opportunities. So even if I would have got this second one in here, you know, you got to pay yourself, like, get the hell out of here inside this kind of mess when you're seeing all these choppy chops. I'd be out of this thing. Just, I wouldn't want to be mumbling around in there. But Derek's made from stronger steel than I am. Oh, I guess Mike Smith must have left. Is Mythical Man still in here? I want to see his he does some live trading as well. You guys want to check out Mythical Man? I haven't seen his stuff, so I don't know how good he is. But I respect a man who takes the time to put it out there live. I tell you, it's hard to trade live with a bunch of people watching you. But if you just stick to your trade setup, stick to your rules, if they fail, they fail. Nothing's going to be 100%. Have you still got your stop loss sitting up here, Derek? That's right at the mean threshold of that candle. See, we're just visiting these two areas, hey? I didn't draw that other one out, but you all see which one we're sitting between. We're literally stuck in these two ranges right here, or these two zones. See how we're just like mashing around inside them? Come back up. And it's the algorithm's going to run out of arrays to reach for us, so it's got to expand out of here eventually. It's building liquidity on both sides of the market. We have a nice consolidation happening here now. So you wait for a break to the upside, then you wait for that reversal pattern to happen. Would be really nice if we had a break upside, come back down, find some support, get in it, go down, or wick up, take that high out, come back down below cam model 1 or 2 entry for a short. I think it's time for some scrambled eggs, Derek. Sorry, buddy. This was the linchpin for further shorts. We needed a body trading below this to continue on the downside. All the bodies are respecting that open of that fair value gap to the upside. So now we worked all of this and we have to extend. So we've extended up this whole range here, and they're into the mean threshold of this order block once more. Bodies broke above it right here now. See that? We haven't had a body break above it yet, and now we do. Came back, tapped it. You're looking for further upside prices now. If you look at it from a pure inversion perspective. Yeah, I saw that this morning. Michael was saying, like, keep it small, short, sweet. That's why these little quick grabs on liquidity, I tell you, they're great opportunities just to snatch out right at the rejection block on old low. Look at the range you're in, look for 50%, pay yourself 50%, pull. This is the opportunity to start using your fib tool to pay yourself with a fib trade reversal. And if we get in another trade, I'll show you the fib tool. So you see how we are all aiming for this initially, but the moment it broke that and we have a trade above, I go, you don't like that idea, because again, your inversion is broken to the upside. You come back, especially when you find a nice wick off that and some support, and then you start working up this other side. This becomes the pivotal area because it's the premium array. If you break the premium array to the upside, then there's more upside. So you broke the premium array to the upside. Now there's more upside. If you break on the discount array on the downside, then there's more downside. If you're in between these two, they tend to bang. You tend to bang around between inside that little range that you're in, order block. So you're kind of just banging around in between them. And if you got a fair value gap that's supporting those two order blocks, then you gotta wait. You gotta wait for something one of them to give way. You want to see this break to the downside? All they're doing is just extending this range unit here right now. You run these little highs out here. You could run down these little lows out here, come back into the range again, that bigger consolidation. So you want to see this one close below here and then close below here. You get the opposite effect. So we're looking for higher. We didn't get any higher. We're pulling back down. So if we're just coming back into this smaller range here, look at your 50%. 50% is right there on the middle of that 62% is right there. Order block. Good. Now you want to see this really start to get some steam here. Mean threshold. Does this hold price, or do we finally pop through this, come back, find some support at it, and then start going lower? Come on, you can close. You can close below. Well, took me out there. Yeah. Paul's escaping the clutches of the outlaws. Well, welcome to safety and security there, Paul. Welcome to our traders family. I've forgotten how much I hate drywalling. We had the carpenter come in the other day, and he cut a hole in the wall behind the fridge. So he says you could recess your fridge in there because our fridge sticks out a bit far. So he cut this hole in the wall and went back in, and it was great. He gave us 4 extra inches of space in there. But he hates doing drywall. I said, "Oh, I'll do it." I remember doing drywall way back in the day. I hate drywalling, mudding and taping. What was I thinking? What was I thinking? And then you remember all the dust everywhere. Well, it's different when you're in a construction type zone. When you've got your whole house is getting dust everywhere. And then, you put on at least 20 or 30 pounds more mud than any normal skilled laborer would do. And you sand it, and you don't like it because there's lumps in it. So you do it again and again. And you just keep covering the house in more dust. It's frustrating. Then you get the nicks and cuts on your hands. You're like, yeah. I'd just rather just pull out my pencils and do my drawing and painting in my retired manner, not being doing construction. Oh, and you're my back. Holy smokes. Just mudding little pieces like that eye height was like, that's too much already. So now this is going to be like, well, somebody could probably do in 20 minutes. It's going to take me 2 or 3 days to do. All just because I want to save myself a couple $100. Anyway, so here we are. See how that we've just come back down on a floor on that right now inside this range. So we've taken out the high, right? We're pushing for the high and we're leaving the bottom intact here. So we've come down once, set the low, come down, and this fair value gap is holding price. This one gave way to the upside. This one's still holding price. So if we see this give way to the upside one more time, we want to see it start pushing through this, reach into the rejection block, and finally reach that daily objective we're looking for right there. See how you just like, one extreme to the other extreme. Got a fair value gap here, a fair value gap here inside that smaller range. So when you're looking at these little tiny keeping in mind these ones still, you've got to try and keep those in there, but they'll be overlapping. It tends to crowd up the charts. So I'm going to go sideways with the carrot until it makes up its mind where it wants to go. Smaller range. You validated it here. So you got this order block here, this one, and that guy right there. So we're waffling in between the two. Start pushing up higher to get through this one, or push lower to get through this one. Because now you're running out of arrays again, and you got to extend your range. Okay. Meanwhile, back at the coin, we've got this one here, this one here. I'm going for the lower one, but if you're looking at this huge range right here, this one that initiated the entry is probably the one you want to be looking for. But keep your eye on that guy there, because we have visited it once, twice, three. Yeah, so we're looking at this one here. This one's been visited enough times here, taking out that high. So see how we've just returned all the way back to this array right here, and we just tapped into it right there. See that? You just tap into it there. Now you want to see this provide a level of support, and we're looking for like array to like array. You're looking for another run back up in there. I'd like to see a body get below this low, ideally a body, and then reversal, not just these little wicks, because to me they're not robust enough. I like to see this come all the way down and maybe into the midpoint of this candle, this inversion here. But that could be a perfectly fine place to just run below that low is all it needs to start running back higher. So now we've traded above this one. See that right there? Be cautious if you're putting your stop loss down here, because this is a relative equal lows. And if you're aiming for something, you're looking for inside a smaller range, that candle there, mean threshold, pay yourself a little piece there if you got in there, which you didn't. So you wait and see. And then if you blow through this candle, if we end up running right through both of these, come back down and tap that, then hold that one and look for a 50% or 62% opportunity to get into this range here. But you have to take that candle out on a high. If you come back into this one, So you're already over the 50% mark right there. So I'd wait for all the way down into here, just because that's too close. And if it trades below that, comes back into it, get out and wait for it to finish off the rest of your low. If you did take that as a 1, 2, 3 entry, I wouldn't, just because I haven't seen a body get below that. But ideally, let's watch here just for a second here. This is a lot cleaner setup. Now, the fact that it's running that and not just tapping it and taking off. So let's pretend our stop loss was here. See how we've traded below it? Now wait, if it comes back to it, here's your opportunity to get out for your stop loss. Your stop loss got taken. That close right there tells you that we're going lower. That's why I like bodies getting below here. See how it just ran all the way through all of those, the other side, and closed? And that's the place you want to see it stop. Kick off there. Back to the bathroom. This coffee was super strong this morning. I'll be back in a few minutes. It did not give, it took off. That's good. That did not give us an entry at all. This is good. So now you just wait for a swing point to happen. Keep your eyes on Bitcoin. Look for a swing point happening there in Bitcoin. Meanwhile, back in the ranch, see how we're stuck in these two? It's like dancing on a barbed wire fence. So we're hitting 11 o'clock. So I'm looking for a retracement back into 50 to 62% of this range. So I would like to see this reverse into here now. I want to see this start getting below here. I wouldn't take the trade, but I'm looking for a run back into here now. 11 o'clock. I want to see this give way here. So let's get the carrot out. That's where we're going to go. That's what I want to see. We'll see what happens. Okay, no shoots, no shirt, no service. You're being a dick. You're gone. No shirt, no shoes, no service. No service exactly. Bye-bye. Oh, and you missed the opportunity to catch what I said. Whatever. Can't let people like that bother me. There's always a troll out there. You see, when you're in a consolidation, you can say it could go either way, and it usually does. So, yeah, it's the right thing to predict, I suppose. So now we return back into the consolidation. Body trades below it. I want to see that provide a level of support now and continue coming back down. What an idiot. Makes me wonder how people can be like that. Like they've got to, they get off some sort of joy out of poking at people instead of had an opportunity to potentially learn something, but their minds are so stuck on being spiteful or rude, or I don't get it. Like, you don't like it, just click the off button. Like it, I don't get people like that. Just leave. If it bothers you that much, just leave. If you're not getting what you need, leave. There's plenty of people out there that are going to give you what you need. Mm-hmm. look at the 50%. There's 50% of the range, and I called it at 11 o'clock. We're looking for 50 to 62% of the range. There's 50%. See if we can get 62 or more. Yes, that whole never put any yeah, I'm just eliminating this idiot. All together. I haven't got time for people like that. Moronic. So 50%. No. We still have this stuff up here, and we still have not finished filling that daily fair value gap. So here's where you find support off that downside. Remember saying if you break the upside, like we did up here, then we're going higher. Then if you break the downside, one here, we're going lower. So that we just kept banging off of it here. And then we finally broke it right here. I'm going to show you this guy here. So you have this one that was broken to the downside, obviously. And then you got this one here that we had originally over here. So yeah, the body, it comes back up into the mean threshold of that, or consequent encroachment. Finally hit the 50%, just took out that low, hit the 50% of the range that we were looking for at 11 o'clock. Then run back up. There's a small fair value gap here. We now popped up above that. You want to find support at this and continue pushing higher. And see how the body's closed above even this one again. We've run down to our 50%, took out the lows that we were looking for, and then you're looking to run back up and clean out some of the liquidity above the market here now. And if we trade below this again, then we are finding more support to continue down to the downside. So there's the mean threshold. You want to see, if you are bearish, you want to see that hold and continue down and dig back into here, get below this and start pushing lower. If that gives way, and we've obviously closed above. So if this provides a level of support, now you're looking for higher prices, and you want to see it get through this guy on the upside, like array to like array, right? Or this small guy right here. From one to the other inside that bigger range. And there's a small guy right here too. So if you take it just inside this small range, premium, discount. I think that's discount. Stand by. Just half of it is discount. See that? That half's discount, and then the rest is the premium up there. Heading off to work at 1 today. Weather is iffy, but there will still be some diehards who want to get out and play at 18 holes. I notice NQ took out the low, went below equilibrium of the 15-minute current order flow and entered the 15-minute. So expect something for it to go higher. went to 86,000 seconds for punitive. Oh, that's funny. Did you freeze, bro? Your chart seems stuck. Is it stuck? I don't think I've I don't think I'm stuck. Oh yeah, it looks like it's oh no, it still looks like it's going. So we still found support in here. Now you're digging your way up, and here's the premium array right there. See that little guy right there? Discount. You ran into the discount to premium, premium. So you're inside that range now. So are we going to pull back inside this smaller piece here? If you look at the little tiny ranges that you're in all the time, look for the PD arrays that sit inside that range and say to yourself, is it likely now that we're going to stop at 50% of this wick, or we can actually push through into the discount range? If we find support at this wick and we've got intentions of going higher, this wick, this candle should hold. If it doesn't, then we're looking for this bigger dig into this discount range of that small little range here, and that will bring us back into this order block. So watch to see this candle hold. And remember, 50% of that range is right there, right on that equilibrium. So if we come back, find support of that, push up, there's 50%. Didn't hold, see that? Right back into discount array. I think Michael mentioned this in his videos, that if there's an order block that is sitting inside a range above 50% of the range, and there's a fair value gap below you, expect it to run to the fair value gap. That order block will not hold price. And it didn't. It ran back into the fair value gap here inside the range. So pull your fib tool on that smaller range and see where it went. 50%. See that? Didn't fill the whole thing, just got to 50%, just pipped over it, and then run back up. And that was the 18th, the April 18th video, I think it was, that he mentioned that in. Oh, your YouTube was stuck. One minute showing the 2022 model. Swing high, swing low, fair value gap. Now you see how you've traded below this fair value gap right here now? Body closes below it, find some support, continue coming down now. Could come back and balance off right there. Sorry, right here. Main threshold. I'll keep on the mean thresholds. Consequent encroachment. Look for 62% retrace. Between this candle and this candle here right now. There's very small space in between those two candles to play with. And if you're looking at these two, then you literally have overlapping. These two and these two are overlapping. So it's got to extend its range higher or lower. And we've traded below this candle, so we're expecting lower prices, expecting this mean threshold to give way. If it doesn't, you want to see this fair value gap hold price. Run all the way back up inside it. Wick, it's fine. Wick outside of it, but you want this to provide support to continue down now. For bullet time. Yeah, okay. Reprice, rebalance. Okay. Let's look at this one here. There's your swing. Body gets above it right here. Trades above this order block here. You trade back to the order block here. Long. I missed this one. I just looked over it now. I was like, oh shit, just totally missed that one right there. Perfect entry to go long right off of here once the body closes above it. You don't want to chase price now, even though there looks like there's a nice little decent range for it to run back inside here. Get a run off here. You got this little, you got to give yourself enough wiggle room into here. Stop losses here. Ideally, you wouldn't want to see a body trade below this. Trade back to these old highs here. There's a little imbalance, and that fair value gap, you want to see it hold price. What's oil doing? Like array. We went through this one here on the other side. You traded through it. We're through all of this here. We haven't taken this low out yet. We have taken this one. Not super clean, but I'm looking at this piece right here. Are we going to trade below that little price imbalance there? We're going to start pushing higher, looking for this up here. Have to come back to that. We'll look at those, see how that does here. Let's just come back inside this order block here. Look for that up there. If we close below this, look for another run on this low here. If we stay above this, looking for a run back into this range, look at your fib tool. So basically you'll pull your fib from high to low. As soon as it gets to 50%, pay yourself there and move to break even. Hit 62, move to 50. If it goes to 70, move to 62, and just keep doing that, because you may just get an optimum trade entry reversal. See, now we've closed below it. It's going to take another run on these lows. We've actually opened, gapped below it. So until you get above this high again, or we create another new reversal, I'm not for this one. So let's say you did enter in there and you caught this, you'd be like, oof. As soon as that mean threshold is taken, take your stop loss off. Or if it just a gap down by itself, you just go, nope, I'm on the wrong side of that, close out your trade. If you're patient enough to wait and weather this, if it comes back to you and breaks you even, you get out there at a break even like right. So now you pick your stop loss, move it right here just in case it decides to run down a little further. If it comes back and taps that, you can get yourself out there to break even. I wouldn't even want to see it come back down into that wick again. I want to see it just pop up in there one more time. So watch this. This is your fail-safe, how to decide your fail-safe right now. You might just say, I'm going to take my loss right there, right at that gap. Difference between there and there versus here. That's your decision. How you decide to act inside this wick right here now that you've traded below. So if you were in this trade long and you were like, ugh, it's gap down. No, I'm on the wrong side of this. I got to get out. You see it come down, it closed right there, and you go, okay, so now my stop loss will move to here because I don't want to get any lower. Now you have to decide whatever your way to manage your fail-safe is. Like right there, bang, now you get out. Now you just broke even. So you didn't lose anything on your trade. You're on the wrong side of it. If it trades through that now, I would wait for it to take that high out before I got long on that. So there's your opportunity for your fail-safe to get you out of a trade at break even. You got a little sweat going, ooh, I'm on the wrong side of it. So if this continues down now, you'll go, oh man, I broke even. I got out of that trade just because the signature that tells me that we're probably going to go lower is, and usually remember when it breaks below, comes back into it, usually taps that fair value gap and continues down, or it breaks above it, comes back, taps the fair value gap and leaves. It just left to come back to this order block here and then drove through it, come back, tap it, and we're going to close this out below you here. So now you just get to sit and watch and study how price acts here now. This is your golden opportunity to look at how price acts right in this area and how you would manage this if you're on the wrong side of it. And not just go, oh, I still want to go long. And you're fighting this instead of going, wait, you had a hallmark sign saying you're on the wrong side of this right now. So if this continues down into here, you'll be glad you broke even right there. And that those three blocks right there are entirely your decision on how you manage your fail-safe, if you have a fail-safe. And if you don't have one and you want to wonder what a fail-safe is, go to my videos. You'll see the fail-safe in there on how to set it up, how to run it, how to play it. And you can tweak how you manage this piece right here. Right now, your stop loss would have been taken there, unless you're still holding it down here. The rejection block has been hit. So ideally now, I want to see this get the hell out of Dodge. But we've eaten through that once. We've eaten through it twice, and we still have a signature that says we got to go shorter. Until we get anything on top of that, we're in a going short situation. Does anybody have any questions or anything like that on any of this stuff? Now you have to ask yourself, do you want to still be sitting inside this? If you're on the wrong side of this right now, you were going to go long. Do you want to be on the wrong on this? Yeah, you got some attempts to get down in here. But unless that's your line in the sand, you say, well, if I close below that mean threshold right there, I'm done. I'm out. So stop was taken once, twice. We're aiming for this guy here now. This is when you look back on this decision and go, oh, that fail safe, that gap down, hint that, hey, look, when we're gapping down, that's not a good sign. When I want to be going up, I'd rather have seen that gap up, not gap down, but it gives you one attempt to break even. And like all suspenseful things, we shall come back to that. Meanwhile, back at the ranch, we have returned to the old high here. Right there. Now you're looking to go long. You want to see this fair value gap give way to the upside and continue higher. So not just sit here in the middle of it and we just return to these order blocks here. You want to see it really start to push through now because you can argue both directions. So to me, it's not a place to enter. That was your place to enter. And now I'll be like, I'll be right up against break even on that right now, just because you don't know whether that's going to continue up higher or just reverse and come back down lower. You haven't quite hit these old lows here. This fair value gap has just been tapped. So I think it wants to go higher. It all pivots in this area here. You got a small range. You're in a premium of the premium range. So also keep this in mind. Whenever you're in a bull flag situation, you're in the premium of the premium. If that small little range here, you're in the premium of the premium range. Discount, premium, premium, premium. See how we went into the discount, back up into the premium, tap the 50% area, and then push through. You want to see this give way here now. Close above that. So watch the next 27 seconds. Close above that, even close above this candle here, and then come back, tap it, get some support at this little inversion here now. That will become inversion the moment we close in 10 seconds above it. Right there. Does it come back and tap it and continue forward? So we're just about to hit that old low right there. We just hit it. So now give us a little kick back into here and then push higher. And back at the barn, nothing is happening. We're still stuck between those two support levels. Supports and resistance inside. How do you like your consolidation? How do you like your high resistance liquidity? Do you want to be playing in this? Hells no. Yes. Over the hour. Now look at NASDAQ, or sorry, Dow Jones. That's the range. 50%. Took out that high swing point. Come back up inside it right here. Your stop loss would have been squeezed, but you didn't get taken out. Break that fair value gap on the downside right there. You pop back up inside it. One time inside that imbalance, and then you continue on the downside. 50% of the range. I bet you that's 50% of that range again. $50 of the range. Just pop up above it. Continue on the downside. Come back inside this order block. Here's another one at 50%, I bet. 50% or more. Inside this range, they're all down close candles. See, discount array, premium array, equilibrium, just ran straight up just above there into an obvious price imbalance, order block, breaker, not breaker, more of just a mitigation block, back up to mitigation. Do you want to see that one? You want to see this one stay open? In other words, you don't want to see it trade above this little fair value gap right here. Look at the candles. See how the bodies don't break the high? They still stay on the downside of it, and then you continue on the downside. Look for another 50% retracement back into an old mitigation block yet again. (62% retracement. Imbalance, the same imbalance kind of thing we saw here. You remember how Michael talks about these imbalances? Some people don't like to trade them, but they are, you look for that key level inside a small little range that you're in and say, if you were retracing back now, what would be a key level to reach for here and here? If you get that one, you see a reaction off of it and you stay below this and you trade back into it, you go, ooh, I like that. Now I've got a body that trades below this. Okay. Trade back into it, and then you continue to find support. So now you want to make sure that your box is drawn on that, and then as soon as you break that low, do we come back to it? Yes, we do. Right there, inside a range that supports that order block, old low. It seems a lot cleaner here in the Dow Jones for sure than the buzzsaw known as the NASDAQ. Dixie Doodle, what's your doing? Literally sitting between those, sitting right in between the weekly and the daily fair value gap. Smacking around in there. Not a fun place to be. Body breaks above it. Come back to it. Find support at it. Pushing higher. See how that just came back right inside here? Nice, perfect refill. Look for higher prices here. This is what we're looking for. As soon as we see a body close above it, we closed above it, came back down inside here, traded below it. We didn't get the lows taken out that we were looking for. So if your stop loss was still sitting here, this is where you would have been, you would have still been okay. Not me, I was out there. So what I would be waiting for is for that high to get taken out, or your body trades back above it. You come back to it, find support at it. Stop loss goes down here. Pay yourself at the rejection blocks and the old highs. Equal highs here now. I'd be waiting for this guy to get cleaned out. You get a body above that, come back and find support at this, then look for that above you. Hit the like button. Doing a great job. Thanks, Tommy. You're good for my emotional recovery. I'm trying to appreciate that it takes all kinds to be in this world, and some people just were dropped on their head as children, I guess. $78.20. Unless it's way down here. I wouldn't want to see it get any lower than that. Right there. If you come back and revisit that, sure, that's deeper into your range. We have a rebalance here. And a rebalance here. So like to like, you're above it already. I want to see this stay above here. If we start dropping below here, look for a rebalance down in here. And you're stuck in that small range again. And this becomes equilibrium, so it's not really an important run now. Let's see if I pull this fib tool here to here. Oh, it is in a discount still. It's just below 50, just short of 62%. Wicks do the damage. I want to see it still stay above this with a body. It dipped into the 50% range there. Suppose if you look at the larger range, from here to here, 50% puts you right there, right in the equilibrium of that bigger range. And it just popped below it. Working it. Don't want to be anywhere in that. Meanwhile, back in Bitcoin, see this here? Drop below it, come back inside it. Now you want to see this provide a level of support to come back into a smaller range here now. So just keep your eye on that. Just watch your reversals and see how well they provide support at price. Ideally, if you want this to continue going from a discount rate to premium rate, you want to see this just come back into a smaller range here. Like if you look at this, that's why you have to look at these and say, it doesn't mean we're going to come all the way back down to the bottom. It just means we can come inside this range here. And what's sitting here is this guy here, and this one, this big monster we had here. So we can come back into that and continue to the upside. So what trade here? You want to see that give way to the upside if you want to keep going higher. Right there is perfect. You want to see it snap off of that and come back down again. If you want to come back into lower, you want to go higher. You want to see that one give way on a close. 2, 1. There's your close. You're above. So now I would be bullish just based on that little thing there. So if you come back into here, see how you traded above this to go long? And you think you traded above this to go long. So you got confirmation here to go higher. And you got confirmation here. You closed above to go higher. And higher it is. It's funny how that stuff works, hey? Back to an order block. Keep pushing. Yay! We're continuing on the upside. So you still found bullishness. We didn't reverse directions. We're still bullish. We got above here. You still stayed above this guy here, the 50% mark. Now you've extended the range even further. You want to come back, find support at these old highs here now. Right there, and then start popping off that and go back forward. Leave that open. If you eat through that, then you got the bodies right here at 78.63. I want to see these stay open though. Leave that open. start pushing higher. I hope that just checking to make sure that guy's not in our group. If he is, I'll punt him out of there as well. Don't need rude individuals. You see how on the 1 minute you can still stay inside price action. It gives you evidence to say when it's going long, when it's going short, and when you're stuck in situations where you go, well, it could go either way. It could go up or it could go down. So it could. That's one of those places you don't want to be in a decision of going, which way do I pick? Because then you're just rolling dice and gambling. But if you get further confluences that support further upside, then you've got more of a, you're practicing staying inside price action cleaner, right? And it starts to eliminate some of the fears you have about, I don't know where it's going. Well, just look where you're at inside your range. Look where you get your support levels from. And are you finding support at those levels? And on the larger range, as soon as you come outside of a small one and you start looking for a higher range, what PD arrays could I be reaching for? Pull your fib tool on there and say, what higher objective could I reach for that I expect to see resistance? And if I do get resistance at 50%, for example, say you say, I only want to go, I'm at 50% of that range. Well, let's say you pulled it from here even. There's optimum trade entry. So what's a logical place to come back to inside this range? I've already visited this here. This has all been balanced. They got a little fair value gap here. These old equal highs. You want to see this hold price now. You don't want to see it lose price, because now that you've taken out some highs, equal highs, and you've got a swing point, this is what we're looking for a swing reversal. So you don't want to see this close. So you draw your box in here to the side and you say, I want to see that provide support. And if it does run down, is it logical that it's coming back? Is that in this small little range here? Is this a logical place for me to think, I got equal highs above me and that low? 50% puts me right on the fill of that fair value gap. So ideally, I don't want to see it get below that. Just come down, tap it, or just pop into it and then leave, which would put you right into this. Well, breaker would be right here. These two candles run down, take out this old high, got a swing point here. So we got to return to these candles. And these are up candles, so keep that little imbalance in mind here. If we do get a deeper retracement into here, you want to see a wick only whip through into this area here, anywhere inside that range. Sorry, from there to there. And then continue going forward. If this stays open, even better. We start breaking that high, leaving that open, that's even better still. But you see how equal highs, equal lows inside that smaller range. And there's nothing in there to trade. Slam right through here. Right to here. There's another little imbalance right there. This is the wick. You want to just see this really pull back now. Unless it drives all the way through that. So that was your optimum trade entry. Inside this smaller range now, we said we want to see a wick get in here and then snap off of that and pull back. So we'll see how that acts inside that imbalance, this breaker. Two, one, see how we closed below it. Come back, ooh. So I'm inside this range. I closed below it. So now I want to see this trade above it and close out above it. And this was just a quick snap back into that imbalance area that we were looking for. And did that closes on 50% of that range? I think it did, didn't it? Sorry. Nope. It actually did close below 50. So you want to see this, to get excited about this again, you want to see that get above that. If not, we're going to go lower, digging into this range a bit more. That's your linchpin right now. Where it trades from here, you're back into that indecisiveness because there you go. Now you're above it. Now inside this range, if you keep bouncing around inside here, you're bullish or bearish, bullish, bearish, bullish. Then that's the problem with consolidations is you're in a small little range and it will go sideways like that. And if you're only counting on one order block or one fair value gap, you literally are, every time you get above it, you're going long. Every time you get below it, you're going short, and it has to be on a close. If you've got multiple ones inside a range, then you say, great, if I'm in this bigger range here and this fair value gap, which is sitting down in here, if I get below that and I get bearish, then I'm more looking for these runs below these lows. But if you're just in a smaller range and you've only got one, you have to really kind of key up. Well, I guess you got this little imbalance right here. And you're still above it. You're bullish above this one, so still bullish going higher. Dave Barry, how are you? Good morning. Good morning. How was the anniversary? It looks like you've slept in today. Must have been a great anniversary weekend for you. Look at the 1 hour around 1808. Took the low at the BISI and went long. Missed it. The 1 hour. Let's look at the 1 hour. Here's your swing. Body trades above it right there. You come back inside it here. You get a good big deep swing. Swing into this, but the body does not close below that. And we continue up. So if you would have caught this one at, what is that? Oh, that was Sunday's candle. You would have caught Sunday's candle as a run into here to go long. Fair value gap above. Fair value gap below. You're in this one. You ran up, filled that one. You're done. you got this SIBI here. You trade below it here. You trade back up inside it here to precision right there. So this is where you got a reverse. Well, not a reversal, but it's like I'm on the wrong side of my fair value gap now, because this was just reclaimed fair value gap. I suppose you traded above it here. Then you traded below it here. You trade back into it here. Wick stops right on the high of it right here. Then you trade back down. So you've really gone from inside this range now. Discount array. Filled it. So now where do you go? You're stuck inside this range. So you want to see this one give way or this one give way. Preferably this one to continue down on the downside. If you're looking for higher prices, you want to see this one give way and push higher. Oh, well, that's oil. Who are you talking about there, Paul? Not oil. Not oil. Thanks. I just realized that now. Not oil, you dummy. You want to be in NASDAQ. Okay, here we go. Sorry about that, Paul. SIBI. Break to the upside right there. Look at that. Really clean little pop above and a little tiny pop down into it right there. Let me make that bigger so it doesn't look like you're straining your eyes to see it. See this fair value gap here, 1 hour? See how the body closes above it right here? See it right there? Body closes above it. You come back, tap it, reaching for a rejection block, old high. And yeah, you're right, Paul. There's a nice little opportunity to go along there. Even this, find some support at this BISI here. Little tiny guy right there. You come back, you filled the BISI, and then broke above the order block again. Full candle breaks above the high. You come back inside it, continue higher. Propulsion candle. Nice. Good call, Paul. But you missed it, you said? That's okay. Pete Berry. It's a great weekend. Lots of work today. Finally worked its way to the top. There's our 120. It hits it. Was it the 1 minute you were talking about? Was I on the 1 hour? No, you were on the 1 hour. That's right. So imbalance. You'd be squeezing. You'd be trying to squeeze something out of this. This is just a high resistance pool of cheese grater here. It's a cheese grater day. But yam's looking better. There's a little tiny one down here. And yes, they are small sometimes. You could say, yeah, what about this one, Darren? What about that one there? Body broke above that. Then you say, okay, if a body breaks below it, as in this case here, or there to there, that body broke below it right there. And you go, I'm on the wrong side of this. Get out. Takes it out there. If you're counting on this imbalance here, you would have got your stop ran right away. If you're looking at this one right here, body breaks above it, your stop would have been taken out again here. You wouldn't be able to get onto it here anyway. It doesn't come back to it. So you're looking at this order block. As soon as the body breaks above the high of it, right there, you return into it here, short, or sorry, long there. Fair value gap, rejection, old high, not rejection, but anyway, this wicks and body here, clean that out. Aim for rejection here from the swing. You come all the way back into order block one more time. This one here. that old one there. A little cleaner than that mess. You don't want to see this candle lose any highs. You want to see this start to degrade now. Roll over here. Start coming back down. Here's your carrot. You want to see that hold now. You want to see this give way here on the downside. Continue down. That's the high of the day we're looking for. Ideally, so you're looking for that nice clean setup, and there's not a clean setup in there. There's a reprice rebalance for this. If my stop loss was here, I'd have that up against near break even. Too much chopping around in here. You want this to kind of get some legs now and get the heck out of Dodge. Start going lower. So that's what we're waiting for all day today till lunchtime. And now you're going into lunch hour. And we could take out the highs at lunch, before lunch. Or ideally, I'd like to see these lows get taken out now. See those lows get taken? Meanwhile, back on Bitcoin, this trade, beautiful. Continue on the upside, and we're still looking for this thing up here, remember? Remember, if you couldn't get this one here, right there, body broke above it, so you look for this order block. It came back, you found support at that. And you wait, and it comes all the way back into old highs. We gave you there. You've got this reversal one here. You can take that for the high. And we're still looking for that high objective up there. So we'll see if that one pans out for today. And then I'll move to the sidelines and wait. I'm going to go out and have a bit of a walk today, I think. Dixie still sitting in the middle. Oil. Body's traded below it now. You want to see that climb right up above this here now. Otherwise, just returning back into this swing to go lower. That super powerful coffee this morning. Whew. Gotta go to the bathroom again. So watch these little pivot points. So if you're going short because you think this is a reversal, right there's your line in the sand. So if you go short there and it trades above you, your stop loss is sitting right there. They're equal highs, so chances are they're not going to leave those untouched. And the fact that it's not snapping off of there right now would make me really nervous. It's just sitting there. 14 seconds. That's usually the crouch before the run. Just watch that, just sitting there like that. That makes me nervous. Wait for the spring, and all the time it's staying below there, you're good. Stop loss is here. I'd move my stop loss to there. Get ready for another loss. If it like you don't want to see this now that it's come up there, you don't want to see it revisit that. You want to see that just start leaving now. And see how it's just hovering there, just sitting, not doing anything. Now you want to see it push through here, getting lower. That's your perfect entry. Stop loss moves to there. Now you're at least break even, and wait, just because you're in a consolidation. Small little range here, so that's good. Push through here, pay yourself a piece right there. From there to there. See, it just opened right here. Pay yourself there. Keep coming. I'd be moving into profit right now and move right there. Pay yourself at the lows. $66. Now you're into that discount range. So premium to discount. That's unusual. It just kind of hang there. Those always make me nervous. And that's actually decreased quite well. So you pay yourself at these levels. And saw this small range. Consolidation back to this order block. Nice. Push through here. Now you want to stay on the other side of this one here. Aim for this guy down here. See you later there, Derek. I'm going to be checking out of here shortly too. This will be, I want to go enjoy my day. So nice and sunny out there. So watch this one. Now you're in the discount array now. So premium to discount. You want this discount one to continue to give way, to continue to push down into a further range. You know, if not, if it comes back into here and finds support at this, then you want to see it get above here. Then you're stuck between those two again. I just want to see my the Bitcoin thing finally get to fruition, just to prove to you guys that it's from one like array to the next like array. And you pay yourself at key levels, obviously, and you're moving your stop loss up accordingly. So the big trade for us today really is in Bitcoin of all places. It's certainly not in here. We did have that finally, that high that we we're looking for. This reprice rebalance, it is holding, which is great. It's a crappy way to get your trade, but it makes sense. That reprice rebalance, we talked about that while it was just after it had happened in here. We said we didn't want it to get above there, and it's not. So far that's working out. Even though we're in this cheese grater of a day, you're still staying on price action. I've shown you a lot of hindsight stuff as well, but I've also shown you live as it's happening, the key areas we're looking for to stay above or below. And when they give way, finding support, you see lots of evidence of that today. It's still sitting in the middle. Those will all be doing the same thing. See how that gave way now on the downside? So now we're definitely bearish. So you've caught that perfect place there. That would have shook me off just for the way it hung there. Stop loss was sitting right above here. Watch the equal highs. Didn't take them out. We had a continuation on the reversal. So that was the perfect entry. It didn't trade above you. Came down. Confirmed that we're still going lower. Traded into this. Confirmed that we're still going lower. And now we're back to the smaller discount one here. Premium discount. More like a equilibrium range. Ran through that. Good support down to your discount range. So that was me. That's more me getting skittish versus not believing in the array enough, in the setup enough. So even I can get thrown off of that. And that's just a journal entry for me. Screen capture that, talk about this to myself and say, just trust your arrays. Don't let your self-talk and negative talk and the fact that things are close talk you out of it, because your self-talk is what's talking you out of these trades. Trust the setup. Oh, we have 3 new subscribers today. Welcome, and thank you for popping in. See how you go from that premium array to discount array inside the range. You hit it. And now if we start to eat through it, and now we've opened up, literally gapped up, opened up above this. So you want to see this push through this little imbalance right in here and climb up on top of the linchpin to say, keep going higher. So this was just a nice retracement back into a deeper part of the range, back to an old imbalance or an old fair value gap. So you're between this candle here now and this one here, inside this small little swing here and swing here. So if we just see this as the support and it just snaps off of that and comes back through this mean threshold, you got more further downside. If we lose the mean threshold of this one, you want to see this close above here. So watch for key levels now. This old low, see what kind of reaction you get off of that. This imbalance that we've just now come back and filled again. You're inside the range, so this is all the premium portion now. How does it act off of here? You've got one sitting below you here too. And you also have this fair value gap. When you're inside the range and you're right near the middle of it now, yes, you can say it can go either way, because it can. You have to decide now, go on a higher time frame and say, where am I biased towards? Now you may use a 1 hour, and that's pretty much right in the middle of that 1 hour range. So you go, I don't know, hour, I haven't got anything. Pull a 15-minute, 30-minute, and see if there's anything inside here that you're biased on, because right now we're sitting right at the equilibrium. So yes, you could go either way. You want to go higher because you want to look for a 1 minute premium array way above you. So you came up into a optimum trade entry, back into a discount array, right up into a premium array. It's a support. See how we closed right on it? What's the low on that candle? The low is 72. The close is probably 72 as well. 73. Yeah, so that one did close above there. Came back, tapped it, popped inside it, continue on the upside. See, just 1 penny is the difference between that candle's close or low. Oh no, it was 73 and that was 73 close. Yeah, sorry, same one. Opened, closed above it. So you go, great, now I'm going higher. Came back, tapped it, found support, and you're pushing higher for your premium array. Discount, premium. Like array to like array. And you'll hear me talk about that a lot in in here, going from like array to like array. Just like that whole Bitcoin thing that we're talking about, looking from like to like. The same kind of thing we just saw in oil. Just went from like array to like array really quickly. Finally hit it. 8 minutes, and that's a lot of money in a 1 minute chart if you had one lot on that. Now, if you get on top of this one, look for this mean threshold to give way, then push higher. Look for your higher time frame objective. So you're looking for fair value gap here on the daily. 79.14. And you want to get above 79.58 over here. You would have caught yourself a doozy right there. What's this guy up to? There you go. So you're still in this reprice rebalance right here. That one's still holding for your return into the day, equal lows. It's choppy, super high resistance, but you are still in price action if you understand what you're looking for. So let's say you missed this one. You look for the order block that supports the run above. You traded a body right here below it, right there. That trades below it. As soon as you trade back inside that order block, and boom, you're inside that wick at least. Continuation on the downside. And you'd have your stop loss sitting above that fair value gap there and that one there. If you use this, you said, well, I don't like that one, I'm going to use this one as the swing point. Body trades below it here. You don't get an opportunity to get in on it there, but you see the body starting to trade below here. As soon as you get a full body below that there, that's when you trade back into that order block. And we'll put our carrot down into these lows here. That's your next objective. Sell side liquidity. As soon as it takes us sell side liquidity, I'm out of here. Hopefully you guys got to learn something today, and you got to see how to stay in price action even in these choppy, crappy environments. You can still stay in price action. I couldn't say there's the best trades, but we get a couple of short little entries. It's what Michael was saying about stay short and frosty. Make sure you just grab these really small little opportunities if they present themselves. And if you don't know price, rebalance stuff, then you won't see this. You'll see this here, which is fine. You can still capture this as a short. And we're looking for this objective to close out. And then that'll be it for me for the day. And hopefully you found something. If you like it, by all means, click the like button. I always appreciate getting some feedback on the like buttons. Let me know if you guys appreciate it. And there's never many people make any comments. So if you've got comments to make, you can put them in the comment section below. I appreciate your feedback, as long as you're positive feedback, please. No negative stuff. There you go. We finally hit the objective and beyond. Yeah, great. Now where are we heading for? Look for down here. So the next sell side liquidity is right in here. And then you have this fair value gap below you here. Lovely. And look for all the way down into here now. This whole box. So that's the thing we were looking for today. We found it. Not super keen in this area. So if you're patient enough and you trusted your arrays enough, you'd be in on a beautiful run down into here. That would have been ideal entry was at 18,115. 18,115, 18,1. So you're about 60, 50, 30, about 45 handles right there. And if you get the full fill, you're looking at 58 handles or something like that for this full fill down here. See you later, Lobo. Thanks for popping in. Appreciate your time. And I hope the rest of you appreciated some of what we were I was trying to show you today. And if you can see the logic of it, hopefully you can see the logic of it. If not, then stick around, come back again. We'll show you when the markets get cleaner, this price action becomes so much easier to see. And, you know, it was getting pretty choppy in here. We're still able to stay on the price action. It's these big choppy environments. If you can stay in price and you can justify where it's going, when it's happening, and where you expect it to go while it's happening, you're starting to understand price action a lot clearer. And it will make your entries and exits on higher time frame objectives a lot cleaner. We knew that's where we wanted to go today. We hit perfectly the area we were looking for, and we're waiting for a nice clean swing. Well, obviously, NASDAQ is just being its typical cheese grater self, and you have to be able to see that. And we saw these ones here, but again, didn't take it. But It's up to you guys when you want to take that, when you want to trust these reversals. We have plenty of time. This is just the start of Monday and we're back into the middle of this range. So I'm still looking for Tuesday to get back into here. And then if we catch off this here, here, or here tomorrow, looking for a run back up. So tomorrow could be a really nice little run. So looking for a Tuesday, Wednesday run back into this fair value gap weekly and then take off. That's where I'm looking for this week. So if you don't capture this one, who cares? Watch this one here. But now that you've taken out these lows, I still think that fair value gap below you is, where are we at? Did we hit that? 18,068, 18,068. Yep. So we just tapped into that fair value gap right here. That could be some support. You want to see this now. If this provides support going back up, look for another run back up into premium discount array. Meanwhile, back at Bitcoin, we have relative equal highs. Back to inside that range, breaker that supports this run up. You want to see this breaker hold price now, and this to break to the upside and continue pushing higher for these equal highs. If we close below this and come back into it, then we're going to continue going shorter. We could be, even though that's not the swing we're looking for. Yeah, I guess can't really argue it. This could be the swing back down into the range. So you're looking for this one to hold price to go higher, and you're looking for this one right here, right where it's hitting now, to go shorter. So there's your support, and this could be anywhere inside that order block. So it could come all the way up into here, hit the mean threshold of this order block, mitigation block here, and then run all the way back down and dig deeper into this range. So watch how that acts off of there. And if it continues to eat into it, look for this one here, the mean thresholds you line in the sand. If it starts to trade above that on a body, look for this to be the reversal to continue to the upside. And then look for up here, discount premium or discount premium, anywhere inside that range. You want to really get above these guys here on a full body close to start running these highs out, to start getting more of that as your upside objective. You could get these big swing back into here before finally pushing higher. I'm going to do something here. So if we end up just reacting off of here and working our way back down to take this low out, anywhere inside here, could be anywhere inside there and there. So we could see a return back into this fair value gap before running to that one. That'll bring us here to here. Or that'll finally clean out, just pop above that high there. That's reverse engineering your price lag. You want to see this clean this out here. I'm going to leave that in there just so out of curiosity. We'll see how that works out. I'm going to watch that one for today. So kind of keep your eye on that one for today. I'm trying to reverse engineer that trade. So if we close above this, see how we closed on it? Close above. We're already through the mean threshold of this candle. So I like this for continuation. But you're inside the smaller range. So you could be just coming back inside here. I want to see that give way to the upside as well. And then if we start clearing out these highs, then look for this further run up. And if this is the next price leg up, you're looking for at least that premium array that we were talking about earlier. That's the objective for this morning or today. And if we reach that, then I'm going to be tickled, because I like that idea for that run up. So just kind of look for the support now that you've got that one here. Body's above. Anywhere inside here, reverse into it to continue back to the upside. That's what you're looking for. See how you've hit the edge of that range? Discount to premium. And you're that one candle puts you between this discount one and that premium one. See how you haven't traded back into it? So you want to trade back into a nice discount of it first before you start running up there. But if this just holds right there off of that, 1, 2, 3, there's your potential layered trade to go higher. You got relative equal highs up here. This one's your decision. Do you decide to take it or not? That's for you guys to decide. All right. Well, that's it for me, folks. And I will see you guys. See that? Reversal. Body trades above it. Trade back into it. Mean threshold. Little imbalance. Push higher. Look for the range. Now, lunchtime, we're into lunch, took out the 11 o'clock lows, the morning lows. And now you want to push for higher prices. I really don't want to see it go up that high. I just want to see this as a price leg down, start pushing down further. I still want to see this come down. But pull your fib tool from top to bottom, from here to here, and look for your P rays to provide support. I want to see, you want to see this kind of give way on the downside. If it doesn't, keeps pushing higher, you may have to run all the way back up into here before coming back down. I don't know, that might take that high out again. And if it does, and we get a cleaner setup, like this is obviously a cleaner setup for a run higher, look for again your imbalance over here on the daily. And you may have to wait till this afternoon to catch yourself a decent reversal. We'll have to kind of keep an eye on that this morning. Tell you, when you see these enough times, you'll see them and you'll start to trust them. It's how much you're going to leverage, how much leverage you want to put on that. The first one, the second one, or the third one as your entry. If you wanted the third one, you wouldn't have got it. You would have got the consequent encroachment and the high of the fair value gap reversal, right? Don't beat yourself up because you missed this now. Just get excited about when you see these opportunities starting to clean up. This is all choppy. See how clean this one is? It starts to clean up itself now. It starts to make these deliberate moves. When this starts to happen and you see this on clean charts, man, oh man, it starts to get fun. Now, when you see this on a 5-minute, 15-minute, or an hourly chart that starts happening, look at how many pips you're hauling. What if this was a daily chart? Would you start hauling some huge pips here, or huge handles now, right? Anyway, You get the idea. Joe, hello from Hungary. Hello, hello. We fib tool from top to bottom. 62% retracement. Right off of this consolidation, CAM Model 1 entry for a short. CAM Model 2, if you close above 50% of that, your CAM model, use your fib tool to get out. Or sorry, your fail safe to get out. That's a CAM Model 1 entry right there for a short. Back to consolidation, consolidation to consolidation. As soon as it taps this, take a piece off there. You know, when you're trading between consolidations, you usually want to tap. You're trading the space in between them. Anyway, that's it for me. I keep saying I'm going to leave. But anyway, I hope everything's well with you guys. Hello, Joe. Welcome. I'll see you again tomorrow. And all the best to you guys. Enjoy your day. Get out there and enjoy the day as well. You don't want to be spending too much time sitting in these charts, especially when you're in a choppy environment like this. Tomorrow, I think tomorrow's going to be a good day for some chart stuff. We don't know yet, but we got an imbalance sitting right here. We got an imbalance sitting right here. We have a weekly fair value gap to key off of here. And we got fair value gap above us. Man, we got some cool action. So we've got key levels that we're going to look for these swing points to get us on a long or a short. Doesn't really matter. Tomorrow at an optimum trade time, and this afternoon, that might be an optimum trade time for us to capture a nice little nice little run. So if you're using this fib tool right now, and that was your entry off of this reversal here, 50%, you take out at 50%, move your stop loss to break even. Hit 60, take out 62%, take out a chunk there, move to break even, from break even to 50%, and you just came back, took you out there, and you're done. That's how you use your fib tool to manage quick short range. If that turns around and comes back down, now you're going to be tickled pink that you paid yourself at 62% and the rest of it at 50%, and you entered in down here. Anyway, that'll give you some ideas, some things to play with. CAM models from here to here. Pay yourself at the CAM model entries. If you lose 50% on the close it, because you're probably running above you here to higher levels. Anyway, I'm out of here. I will see you guys tomorrow at 9 o'clock Eastern time. And or if you're on our Telegram channel, I'm usually on here for a while yet. And I'll see you guys on Telegram. I tend to have chats on there all day long, all evening before I go to bed. I'm still chatting away on there. So if you have any questions, by all means, pop into Telegram there and ask us. We're happy to help out. There's tons of really smart people in there to help you out if you're still practicing Michael's stuff. But until then, I'll see you tomorrow. All the best, and take care of each other out there. See you.